Hi, my name is Lana Payton, and I'm the Utilities Tax Leader for Canada, and I'm here with Debbie Baker, our U.S. Tax Leader. I'm going to talk to Debbie today about some of the tax considerations that power and utility companies should be thinking about when they're expanding into the U.S. Like many of their counterparts in Canada, we're seeing more and more power and utility companies looking to different opportunities around investing and expanding their footprint, and they're looking to our neighbor to the south, the U.S. Debbie, thanks for joining me today. So Debbie, what should some of our clients be thinking about as they're looking to expand into the U.S.?
Well, I think there's really two angles in which a company needs to consider its U.S. operations. The first is the impact that it'll have on the entity and whether it will create a taxable presence for the entity. The second is to understand the implications to its employees who they may send down to the U.S., as it may create a taxable presence for those employees as well.
Debbie, can you give us some examples of some of the typical triggers that clients should be looking out for when they're expanding in the U.S.?
Sure. Of course, there's the obvious ones, such as opening an office or having an employee of the Canadian company signing contracts on behalf of the Canadian company in the U.S. But there can also be some more subtle activities, such as buying or selling into the U.S. that could result in a tax filing requirement or tax exposure.
So Debbie, what are your top 3 implications for a company that has entered the U.S. and should have been filing but hasn't?
The first thing is that if a company has had a filing requirement and has not filed U.S. returns, the IRS can impose tax on its gross revenue without allowing deductions or credits. There can also be significant penalties and interest that can apply. The second thing is to consider the implications to employees who have been sent to the U.S. and whether that may create a taxable presence and/or filing obligation for them. The third thing is that there could be a missed opportunity to set up operations in an efficient manner.
So Debbie, what would you recommend to a company that's looking to expand into the U.S.?
It's important to understand the business objectives so that you can choose the appropriate entity and the appropriate way of financing your operations. It's also important to understand the state tax implications of where you intend to operate. Finally, it's important to understand the compliance requirements, as significant penalties can apply.
Thank you, Debbie.
My pleasure.
So in summary, as you're looking to expand into the U.S., it's important to understand what your business objectives are and what your potential future footprint will be in the U.S. It's also important to understand your U.S. tax liability as well as your compliance requirements as you go there. It's important both at the federal level as well as at the state tax level. And finally, it's important to be proactive as you look to manage both the entity and your financing in expanding to the U.S.